Hello guys, welcome back to the channel. I hope you've had a wonderful Christmas period. Today we are going to be speaking about the Bitcoin top signal, which has just presented itself on the charts. Before you comment that this is clickbait or that I'm just fudding, make sure you do watch that section of the video because the outcome doesn't necessarily mean what you think for altcoins, but I do think it's an important thing to discuss when it comes to positioning for the next few weeks. And hopefully in this video, I can help provide you some guidance as to how I think the next few weeks in crypto are going to pan out heading into the new year. I'm also going to be talking about the top altcoin narratives that I've got my eye on heading into January because there are some clear trends right now which are exhibiting relative strength. And I am also going to address Lucky. I want to make light of the entire situation and give you my take on what is happening over on that side. So without further ado, let's get into the video and start with our discussion surrounding Bitcoin. Looking at very basic technical analysis right now, you can see that we are currently testing the lower bound of the money noodle indicator on the daily, which is basically a moving average. You also have confluence with the range low region here, which we are currently bouncing off. Now, I'm going to keep it real with you. Bitcoin's price action right now doesn't look great. However, this is something that over this Christmas/holiday period, we did expect to be the case, considering liquidity and interest in the market is super low. So I think in terms of establishing a clear trend, we're going to have a much better idea in January. But right now, this price action does look slightly distributive. And in a few minutes, I'm going to show you some similarities to the exact same price action that Bitcoin put in during the 2021 local top. And I think that can help us make some sense of the current market. We're also exhibiting a similar fractal to what we did in the back end of 2023. So this Bitcoin price action isn't uncommon. We just need to navigate it in the correct manner over the next few weeks if you want to position yourself correctly for the next leg of the cycle. So that is currently what I'm seeing on the Bitcoin chart. Basically, multiple retests of this support level. We'll talk about whether I think that is going to break in a few minutes here. The other thing to keep in mind is that you have two major liquidity blocks building up on both sides. So you have this area below 94K, which is a big area of interest, roughly between $92,500 and $93,500. And then you also have a major area of interest at the 100K level. Basically, what this means is we are currently in a range, and the horizontal price action also exhibits this on the daily. You have the range low interest kicking in at around $92,500, and you have that resistance kicking in at $100,000. And right now we are just chopping sideways either side of that range. These are both zones where there are significant stop losses to the downside and also stop losses for the shorts to the upside. And that's why you are seeing occasionally these big liquidation wicks either side of the range before consolidation back into the range. So we are compressing into this zone right now between 92.5 and $100,000. Once again, we're going to talk about whether I think we could potentially see a break to either side based on the previous chart patterns that we've seen in 2023 and 2021, which I think are both in terms of a fractal, the most relevant to the current situation. Taking a quick look at Bitcoin dominance here, you can see that we have seen a slight decrease in dominance over the last few days. Obviously, altcoins sold off the most when we had that initial big dip on altcoins last week, but now we have started to see alts recover slightly versus Bitcoin. So the sell-off for Bitcoin has extended, but for alts, many of them have kind of found a floor around their daily levels, daily horizontal levels, and also the 200 moving average. So what I would encourage you is when you are looking at altcoins, go into the daily or the weekly chart, and before you buy anything, look at the major daily support levels, because a lot of alts are now coming down to test those levels, and that does give you quite easy levels to bid in terms of having very clear invalidation, which of course we love as traders in the market. So keep your eye on alts that are retesting those levels. Obviously, having the prerequisite of those altcoins being from a strong narrative. We're going to discuss those narratives later in the video, having exhibited relative strength during dips and decent price action, as well as having a trend that you think can take it forward in Q1 if we do see a bigger bid for altcoins. Over the last day, there have been a few alts which have rebounded, but it's really interesting to look at what alts have actually been exhibiting strength. So you've got Virtual, which is performing really well. There was actually a big whale that was dumping a lot of Virtual, which was suppressing price, but there is the sentiment now that that whale is out of the market, which is why you're seeing the price rebound very strongly. Interestingly, you're seeing centralized exchange tokens have a huge run. So BGB, the Gate token, and the OKX token. This is something that I actually spoke about, if you remember, a couple weeks ago on the show. I said to keep your eye on exchange tokens because during volatile periods, exchanges are obviously making a lot of revenue. And during massive pumps, they're also reflexive to the upside as more people are signing up for exchange accounts. So that thesis is kind of starting to play out now with the relative strength here. And I do think if alts did go on a massive run, you would see the centralized exchange alts performing well, clearly just based on the trend we've seen over the last week. BGB obviously up 92%. Apart from that, most other alts are down. However, it's also important to look at what alts are down less than others. So a lot of the RWA alts, as you can see, are down less. A lot of the utility alts are down less. A lot of the L1s are down less. The alts that seem to be down the most are the meme coins, or conversely, the coins that have had major run-ups and have hit a catalyst and then seen a sell-off. For example, Phantom is one of the biggest losers this week because you had the Sonic network actually go live. So there's a bit of buy the rumor, sell the news at play. So it had a big catalyst, but obviously it had run up a lot as well. So that's why we've seen a bigger retrace. Actually, side note, I think Phantom might be a decent one to DCA into over this next period. We'll get into my full plan in terms of altcoins slightly later in the video once we get through this Bitcoin section here. Interestingly, from a macro perspective, on Bitcoin dominance, we typically see dominance peak in the halving year and end up reversing substantially in the post-halving year. Now, obviously, 2024 was a Bitcoin halving year, but next year, 2025 is a post-halving year where typically you see the biggest gains on alts and the biggest reversal versus Bitcoin on alts, which results in a decline in Bitcoin dominance. That has happened the past 2 cycles. I am anticipating this does happen again, and we have started to see the early signs of this occurring with the lower high now setting in, which is quite clearly on the daily in terms of Bitcoin dominance. Now, if Bitcoin does have another leg to the downside, which we're going to speak about, then you might see dominance spike again, but I'm still skeptical that we will see a breaching of that prior high at 61. It may end up being a double top pattern that actually starts to form even if we clear this previous high, and that's assuming that we do clear the previous high. So I do think we have started to see the early signs of a reversal on Bitcoin dominance. You see this move here potentially creating a lower high, which is obviously good for altcoins. It's not inherently good for alts in terms of USD prices because we are looking at prices relative to Bitcoin, but it's good in terms of the sentiment shift that when new liquidity comes into the market, what coin actually gets the bidded the most, Bitcoin or the altcoins? Well, typically it's the one with the most momentum. Momentum is everything in crypto. So if alts have more momentum going into a liquidity influx in the market, theoretically, dominance should decrease even further and altcoins should catch a further bid off the back of that. It's interesting though, actually looking at alts versus Bitcoin, so the others chart, which is the altcoin index excluding the top 10 versus Bitcoin, they've barely moved. I mean, you had this big wick into this diagonal resistance level as well as the moving average, but you've ended up seeing a massive reversal and then a flush out, kind of like a Darth Maul candle taking out liquidity on the other side of the wick. So altcoins actually haven't really moved yet. That move was basically just a fake out. If you look at the monthly chart, we still haven't even had a break of the others BTC chart, anything near reflecting what we got in 2021. And if you actually want to draw in the similar price action that happened in 2021, early in the post-halving year, which we're about to head into, in January, that's where you actually saw this break. So the similarities for altcoins versus Bitcoin are actually quite striking this cycle versus the previous cycle. So that's something to keep your eye on. And if you are like a heavy altcoin trader or investor and you're looking for a signal to go more risk on, yes, DCAing is a valid approach, which we're going to speak about later, and that's an approach on major dips that I always preach here on the channel, just as you should take profits on major rips. However, if you are a little bit more risk off or you're being a bit tighter with your capital at this stage in the cycle, there actually is nothing wrong with waiting for a confirmed break, not necessarily just on others BTC, but also, on the previous high break on Total 3 and waiting for certain altcoins to gain momentum instead of trying to catch a bottom. There's nothing wrong with that trading style. It's called a trend trading style. And that's actually something that for less experienced traders, I recommend. Instead of trying to time bottoms and get too finicky with actually timing the lows and timing the top. So there's actually no need to rush. Right now, I'm not feeling like a panic to accumulate before this breaks. You can also wait for trends to start to establish themselves and then position yourself accordingly. So at this point in the video, you might be wondering, Miles, what were you alluding to in the title and the thumbnail of the video? Well, what I'm alluding to is the distributive price action, which I want to discuss. So basically, I was just scrolling through my charts and I was taking a look at Bitcoin and I said, this doesn't look great. Like, I'm just being completely objective based on price action, and then we'll actually put in the seasonality behind it after we look at just the technicals to actually assert how you can trade off the back of this. But just on face value, just looking at the chart with no other context, no seasonality, disregarding the fact we're going into a post-halving year, which is typically bullish for altcoins and Bitcoin, I just looked at the chart and I said, look, this does look a little distributive. So then what I did is I went through distributive patterns that are typical in bull runs. So I went through the previous cycle in 2021, I went through the price action from last year in 2023, and I noticed some similarities. Now, the first similarity that I noticed is just how similar the current price action actually looks to the Wyckoff distribution schematic number 1. Now, this doesn't necessarily need to play out exactly like the chart in front of you, but it's a general series of events that happens across 5 waves, which result in distributive patterns. Now, these patterns typically in bull runs mark local tops, not cycle tops. That's a very important thing to note. Cycle tops are typically blow-off tops in crypto. This is distributive price action, which typically marks local tops. So it's a consolidation period before the next leg to the upside. And if you actually look at the Wyckoff phases here, they look very similar to the current Bitcoin price action. So I want to point them out. First, you have phase A, which happens here by setting in a local top on the lower time frames. That's exactly what you see here. Then you see this pullback into this AR level, which is exactly what we saw. We saw a pullback into this level. Once again, slightly different, but you're looking for the general phases to play out. Then we saw phase B, where we made a higher high and a higher low. See this higher high, higher low, which is the UT level. So we got this, we got a higher high, and we got a higher low. So let's look at this going, this is pretty similar. Then you've got phase C, which is the smallest phase of the 5 phases, which is where you get your final higher high. And this is the UT/AD test level, where you should see a higher high followed by a series of lower highs. This basically suggests that momentum is starting to stall around a previous resistance turned into support level. This is pretty much what we got. Now, the 12-hour is the best time frame to actually look at these distributions based on the data. The correlation is the strongest on the 12-hour. What we didn't really see were the lower highs because it happened quite quickly. The pullback happened in 2 days, but what we did see was the higher high. Then we saw the bounce, which happened here at the beginning of phase D. That's also what you see at the beginning of phase D here. And then what you're supposed to see is a bounce of support, weakening price action at a support level, followed by a massive dump, which is the final distribution. And if you do look at Bitcoin right now, it does look a little bit similar in terms of having this weakness around a support level, having 3 highs, then a lower high, and then potentially a dump or a liquidation event afterwards. Now, I'm not necessarily saying we have to follow phase E and have a big dump. It could be as simple as a liquidation week down to 88 or even 90K or 85, 86K. But the price action does look similar. So it's something that I'm wary of. Now, the new year typically brings new optimism. The new year, especially a post-halving year, I think does change things slightly versus this being in June. If this was in June last year, I'd be really, really worried. We had similar price action then, but it was a bit different because it was more of a classic bearish downtrend. These distribution phases typically happen after uptrends. So you have the uptrend on Bitcoin, then you have distribution, then you have another uptrend, then you have distribution. I want to show you this in 2021 to make sense of it. So in 2021, we had this pretty much exact pattern play out. It looks a little bit different, but it is classic distribution where you have this pump to the upside, this classic uptrend. Then you see price stall, momentum stalls, you have distribution. Now, I don't think at all that Bitcoin is going to dump this hard. And obviously we had a big dump in 2021 and that was off the back of a lot of macro factors. But the point is you had distribution and then you had a secondary high later in the year, which took you to the real all-time high. So in terms of framing, Bitcoin having a distribution phase, going lower and then making a new high, I think it actually makes a lot of sense in the context of this cycle. What I would question though is just how big phase E would be. I don't think we're going to see mass capitulation, but it is interesting to look at and actually look at the similarities between both and be open to the idea that, look, we may actually see further downside before we see upside. Nothing is ever set in stone. Some big catalyst could come out on January 1st and Bitcoin could pump massively. And this doesn't necessarily mean alts will dump either because of the dominant shift that I pointed out before. Obviously, Bitcoin did drop. Alts would probably drop, but it doesn't mean they would necessarily nuke. I just like being open to the idea that this stuff can play out and markets don't necessarily go up in a straight line. But I'm not an expert trader. This is just a pattern that I noticed on the chart. So what I did is I consulted my analysts. In the Mars High Club, we have amazing traders that are much better than me. Paradise, who's a brilliant low time frame trader, Morin, who's a fantastic high time frame trader, Doc as well. So I consulted them and I actually got their opinions on what they thought of that price action in order to put the full picture together, because I don't think you should ever really make trades in isolation. This is a big tip that I have for you. Whenever you're entering a trade or whenever you are planning a trade or shifting your portfolio, have a buddy that you can talk about these things with. Like, I always consult people before I enter a trade. My research team helps me filter which projects I buy and gives me more insights into certain projects. My team in the Discord helps me with positioning based on macro factors. If I have a small cap that I'm looking into, I might consult Fabian, who's a very good small cap analyst. So I always think it's important to have people in your corner that can actually help you. And that's pretty much the reason why I started the Discord in the early days, because I wanted a community for people to be able to ask these questions, to be able to consult others. If you have a question about trading, you can ask Paradise. If you want an opinion on a small cap, you can ask Fabian. If you want a high time frame analysis, you can ask Morin or Doc. Or if you want fundamental stuff, you can ask me. And you can also form mini research groups within the bigger group in order to do research together. So that's definitely a tip that I want to give you. Actually find these communities. Obviously the Mars High Club's one of them, but if you want to make your own community, you can. The internet's an amazing tool, and you can basically form little communities to help trade with one another. So that's basically what I did in this case. I said, okay, I'm seeing this distributive price action. Let me actually ask what Paradise and Morin think, because they are expert high time frame traders. Now, this is Paradise's chart. He also notices similar pattern of the two higher highs followed by the breakdown and the subsequent lower high on Bitcoin. And basically he said the reason it looks more distributive is because we had daily bearish divergences on both RSI and AO, while price was sweeping liquidity to the upside. Most liquidity is untapped to the downside still. He also referred me to his Discord post that he did yesterday. He said, "Good morning. Hope everyone had a nice Christmas. Nothing has changed for me regarding the plans mapped out in the last video. The range high was swept into supply, so I'm now looking for an equal low / range low sweep to add into some strong alts for a move in Q1. So he's basically saying he's looking for a sweep. He doesn't know where it's going to happen. It could happen at 92. That's a level that Fabian has also found confluence with. It could happen in the divergence zone, which is at 86 to 88K. But these are the levels where he would be bidding altcoins in terms of lower targets. If you don't get that sweep, then maybe he would look to get in on long continuation on some altcoins. And I think that's a super valid strategy. He highlights some of the AI agent coins, Virtual Filecoin, A16Z, ARC as some alts to look at. I also agree. I think some of the AI coins could be some of the best buys in this scenario. I also checked out Fabian's post in the Discord. I think this adds some context in a different lens, more from a macro lens to what Paradise has actually found on the charts. Fabian said, "Good timing on scaling out of our short-term trades from the lows as others rejected from 360 to 380 billion range," is something I also said in my Discord a couple of days ago, that I was de-risking on the bounce. And we have actually had these bounces that sometimes happen intraday before the market's ended up giving up its gains. My base case is still for more chop than trend. I also would agree, just based on the price action that we're seeing in alts and Bitcoin right now, mostly within the range we've established, 92 to 100K for Bitcoin, exactly what we highlighted, and 300 to 360 for others. But I expect we could drift lower and make a sweep of the lows again over the next 2 weeks. And these are the lows that Paradise is pointing out here, potentially between, the low case 85 to 90K, or 90 to 93K, which the lows Fabian points out. IMO, a slight deviation below 90 to 92 is still on the table, although I'd expect it to be shallow and a reclaim soon after shaking out longs if it does happen. That is what could potentially lead to the phase E of the Wyckoff. It could be a quick shake. We're not necessarily saying the market is going to nuke, but it could look something like this, where you get this wick to the downside and then a reclaim, and that could actually end the distribution scheme. But that's just one scenario to potentially keep in mind heading into the next couple of weeks. Fabian doesn't expect others to make a new low below 290, even if Bitcoin does run lower. So he also kind of agrees with what I was saying earlier. And it's interesting actually reading these, because my opinions were formed on my own, and then there's confluence amongst the other guys, which I really like when we're all on the same page. Obviously, Paradise has his confluence technically, Fabian has it based on macro, and I have it based on a mix of both technicals and fundamentals. And he actually thinks that even if Bitcoin goes down, alts might not necessarily break lower just based on the current strength that we are seeing. And that is being reflected on Bitcoin dominance. Alts really gave their really weak leg during that first dip. That's when alts capitulated. I think a lot of them are actually approaching major support zones on the daily. That's why I said earlier, look for alts that are actually entering these key daily levels, because that could actually be a flaw on many altcoins, even if Bitcoin did break lower. And that means that the market might not necessarily nuke, but it might give you a little opportunity to actually get in. And Fabian also pointing out a similar price action to what Paradise alluded to here on Bitcoin. I also spoke to Morin, and he also says 88 is the level he's watching. He says he doesn't necessarily think the Wyckoff scheme will play out to full effect, but Bitcoin is exhibiting a bearish divergence, and that is something to be slightly wary of. And that's pretty much the point I'm getting to with all this right now. I wouldn't panic, right, that a big dump is coming, but I would just be wary of the fact that there could be more chop and potentially further downside. Now, if you want to DCA into alts, we're going to discuss my full strategy. I think that is valid heading into the new year, especially quality alts on major dips. If you have a high time frame daily support level as confluence / invalidation, that is also great. Your other option is, if you don't want to do that, you can potentially look at the new uptrend forming, which I think happens at some point in the new year, probably in January. And that is when you can actually position in altcoins. It might happen slightly later in the month of January based on the dip, which I think has set us back a few weeks versus what the plan was maybe a month ago. So that is basically my thoughts on the market now. And in a few minutes here, I'm going to give you my update on exactly the types of altcoins that I'm looking at and how I would be playing them. Oh, and as a side note, you can see that Bitcoin price action also looks really similar to 2023, where we actually had this pump, right? You had a series of higher highs, just like we got. Then you had a breakdown, a bearish retest. Then you had capitulation back in the beginning of the year, which happened after the end of 2023, followed by a massive run up in price. And the price action right now on the Kumo cloud, as well as the moving average, looks really similar. It's a very similar distributive fractal. So there is a bit of confluence with both 2021, the Wyckoff pattern, and price action in 2023, heading into the beginning of 2024, that we may see another low on Bitcoin before the big uptrend. That would actually be the ideal scenario as well, because it gives you that final opportunity to position before what could be a much bigger run in the market. But of course, these things are adaptive. If we open Jan 1st, really bullish, and we seem to reverse and the fractal shifts, because it can, history rhymes, it doesn't always repeat, then I'll be here making a video and I'll update you guys on my thoughts. I think the best traders in the market are adaptive. They take new information into account and they change their strategy slightly. They're not flippant. They don't flip from bullish to bearish, but they take new information into account and they tweak their portfolios or their strategy or just their bullish versus their bearish levels in correspondence with what the market is telling you. And right now, I'm just compelled to be a little bit cautious and not FOMO into new positions. Now, before we get into the specific altcoins that I want to discuss, I do want to address what has happened with Lucky, because it has been quite unfortunate to see the decline in terms of price over the last couple of days. And I want to shed some light on my perspective as to what happened with Lucky, how I've traded it, and what I think is going forward. Because as someone that made a lot of content about Lucky and was publicly bullish about Lucky, I feel like I owe it to you guys, not only to show you the wins, but also to be here when trades go against us and be completely open and transparent about that. That's always what I've tried to do with my content, and it's no different on this occasion. So for a bit of backstory, Lucky was a coin that I got into, I think about a month or two ago. I found it one day when I was just scrolling through my feed, and then I asked a few of my friends for more information because it looked genuinely interesting. It was being labeled as the OG Doge, and it had quite a cool narrative behind it. And after learning a bit more and digging deeper into the project, I realized that, wow, there was a really cool narrative here. And this was when price was around $2. So I did my accumulation between $2 and $3 and shared it in my Discord because I thought it was a very cool coin and potentially a good opportunity given the low market cap and the cool narrative behind it. After that, it continued to run up quite strongly. Then I made a YouTube video where I shared my full thesis. It was one of those rare times where I found an altcoin, especially a meme coin, because a lot of the new memes are really dry, and it actually had interesting lore behind it, being the OG Doge from 2013, having a lot of lore, having the Lucky branding and the logo and the ties to the Asian culture. I thought there was a lot going for it, and I heard behind the scenes big exchanges were coming. Binance mining pool obviously ended up getting announced, so there was a lot of bullish catalysts that reaffirmed my conviction in the project after buying. And of course, I wanted to share that with my audience. So I think I made the YouTube video around $9. In the video, I did say, if you go back and watch it, to be careful with liquidity because liquidity was quite thin. Obviously, that didn't prevent everyone from aping in at higher prices. I never really encourage people to top blast on coins, but unfortunately, a lot of people did. And that resulted in a major wick to the upside, which I guess was okay because price consolidated for at least a few weeks around that $12 level. It seemed to find a floor around $10. That's when the market started to turn. So a lot of memes went down by 30, 40, 50%, and Lucky was no exception. It also went down 30 to 40% and sat around the $6 zone, pretty similarly to what, coins like WIF and PopCat and other major memes did during that period and actually sold off. So I wasn't really worried around $6 because that's typical price action and the narrative and fundamentals stayed the same. Now, what happened over the last 48 hours, which resulted in that even bigger dip down to around the $2 level, I'm not sure exactly where we're sitting right now, but it might be in the $1 to $2 region, was the OG creator of Lucky. His name's Lucky C. From 2013. His wallets were basically dormant for 11 years. He recently made a transaction shifting funds from one wallet to another. Now, it's not entirely clear if that was a sale because Mexi creates independent wallets, not pooled wallets, so you can't see whether it's an exchange wallet. I think it may have just been a shift to another wallet, not necessarily a sale, but his coins started to become activated after being dormant for quite some time. I don't know why, I don't know what the motive is, but the facts are he became active, and that scared a lot of whales. So a lot of big holders started to subsequently become active, and some offloaded their Lucky. And of course, this happens in a time where memes are already quite bearish and the market is already bearish, and that just compounds the negative effect on price. And because it's a low liquidity coin, there wasn't enough liquidity to protect price, nor to the upside when it was pumping, but also that's equally as reflexive to the downside when it's dumping. So that's why we got such a major sell-off on Lucky. Personally, I'm waiting to see how things actually settle over the next few days, both in terms of price and in terms of fundamentals, because I'm still doing my digging and looking on chain. It is quite complex due to the block explorer being quite complicated. It's not like Etherscan, it's an old proof of work explorer. So we're still putting the pieces together, and I want to understand, what supply is actually active, what's dormant, and what are the plans from the CTO team? Are they still going forward with exchange listings? If all that's still going ahead, then it could be an opportunity. But instead of coming on here today and speculating on future price, I think it's much more valuable to give you some of my reflections and lessons from that trade, because I think there's just as much value, if not more value, speaking about losses than winners. Now, as I said, I got in around $2 to $3. I never sold a cent, not a single cent of tokens. You'll never be able to find any evidence that I did sell a cent because I didn't sell a cent. And I'm still holding it in my wallet to this day. So my position at one point was a 7-figure position, a very substantial position. Even for my portfolio, it ran up to become a substantial position. I think originally I only allocated maybe 2% of my portfolio to it because it's a risky coin. And when it comes to memes, you should never go in with crazy size. That's something that even in my original Lucky Discord post, I said, don't treat it like a whiff or a sol, treat it riskier because it is. However, even that 2%, because obviously it ran up super hard, at one point it ended up being maybe 10% plus of my portfolio. So it was a substantial piece of my portfolio and representing a 7-figure trade, which ended up basically fully retracing now. And I'm actually in the red now. So it's probably one of my biggest losses ever in crypto from a dollar perspective. Now, because it's illiquid and because it's not like a major cap like Bitcoin, you can't really get too attached to the paper number. So it's not like losing millions of dollars on Bitcoin because paper money is paper money, especially with illiquid coins. If you do try and sell, you're not going to be able to actually execute because A, you're going to dump price, which I don't want to do, especially if my community is holding or buying a coin, and B, you're not going to get very good execution. So even if you did want to TP, you'd have to do it super slow. And for me, as I said from day one, this was a trade that was either going to make me a lot of money, 8 figures plus, I said this on my AMAs and Discord, or it was going to go to zero. Now, although it hasn't technically gone to zero, and although there still is a chance it gets revived in the future, obviously it's a lot closer to the latter than the 8-figure trade that I thought it could become. Now, this highlighted a few cognitive biases in me that led me to round tripping this much money. And as I said, I didn't sell anything. I probably lost more on this than anyone that I know. Because I was and this leads me to the first bias, too bullish. So what sometimes happens in crypto is you get something called bag bias. If you become attached to a coin or a story, which I was, aka believing in something, sometimes you can be a little bit too attached, even if the signs are there that you probably should be taking profits or de-risking. Now, it's a little bit more complex for me as a creator because I don't want to dump on my community. I actually have a rule that I don't sell within 24 hours of posting about a coin. And because I don't sell within 24 hours of posting about a coin, some of the peaks that had happened on Lucky, I'd spoken about the coin within 24 hours, so I didn't want to sell anything. So that meant that when it went to $17, I didn't sell a cent, even though my rulebook would suggest, look, you're now a 6x up, you should probably be taking some profits. I didn't want to take any profits at that time for that reason. And then when it started to come back down and consolidate, I knew that there were catalysts lined up for the coin, so I didn't want to necessarily sell at those levels. They just weren't great risk reward levels for me to sell, in my opinion, given my objectives. However, in hindsight, I probably should have, at those levels, after the retrace, after 24 hours of posting, taken some profits. Now, I hope a lot of people in Discord, and even the ones that watched the YouTube videos and got in early, made some profits, because Discord, I posted it at under $3, like $2.80, and it ran up to 17 at one point. Even YouTube, the video went out at $9. I remember when I was posting it, it even wicked down to $8.50, and then it spiked afterwards. So the early YouTube viewers theoretically should have been able to take profits on it as well. However, I'm not totally deluded. I understand that that is not practical for everyone. That's not the case for everyone. And even so, I was overtly bullish about the coin, and the price is now substantially lower. So I have to own responsibility for the fact that I was bullish about the coin. And I think I just let myself, due to the fact I held so much of the token, get a little bit too carried away. And I do feel bad about that because even though I'm not the one clicking the buttons, and I always preach the importance of risk management in crypto, so buying on major dips and selling on major pumps and implementing risk, I feel on this occasion, I maybe didn't do the best job of getting that message across. And I always want to be open about these things instead of shying away from them because, if I make profits on a coin, I'm going to speak about that. Why wouldn't I speak about it if I make losses on a coin? Because there are so many valuable lessons that you can learn in the losses. Here's the thing about crypto though. There is a slight misconception that every trade needs to be a winner. The real truth is, lucky aside, if you invest in 8 coins, for example, if just one coin 10x's but 9 go to 0, you still break even. And if 2 coins 10x, you double your money, even though 8 coins can go to 0. So the reason I'm using this analogy isn't to justify, but it's to explain the concept that staying in the game in crypto is the most important part of crypto because there are always big wins around the corner. You don't need to hit every one. All you need to hit is a couple to make a lot of money in crypto. And over the last few months on the YouTube channel and on the Discord, I actually did a full audit because I was interested, right? When Lucky went down, I'm like, how profitable have I been? I actually realized that looking at the data, and you can verify this for yourself. If you're in the Discord, you can look at the times I posted versus the current price. Looking at the data, I realized, well, we actually had a 20 out of 25 strike rate in terms of coins that are still in profit now versus the first call, even if you didn't take any profits during the pump, which I think most people should generally be doing on any coin. And 24 out of the 25 posts at some point were in profit, including Lucky, which was at one point up 600%. Now, I accept not everyone's in the Discord, and there are a lot of YouTube members who may have looked at a coin like Lucky higher than that, and I totally accept that. The numbers are going to change in that scenario, and the risk reward is going to change for the worse in that scenario. But purely from an exercise of strike rate, even in the Discord, we still, including Lucky, have had an exceptional strike rate by any standard because all you really need to do is hit a few winners. You don't even need to hit 10 or 11 out of 20. You could hit 5 out of 20, but if those 5 do really well, even if 15 do really badly, you can still make a lot of money. So the point of crypto, the point of my Discord, the point of my channel, the point of all my content is to outperform. Are we going to hit losers sometimes? Yes. Unfortunately, this trade went against us. Now, it could come back. I'm not saying it's necessarily dead forever. I just need to let the dust settle a bit and do some research into actually what happened to get a little bit more clarity. But the point is, in crypto or any other trading market for that matter, you just need to win more than you lose in terms of dollars. And if that can be the case over a long enough period of time, and if you have an edge in the market, like I believe I have an edge, you're going to make money over time consistently. And I don't want to shy away from giving you coins in the future that potentially have higher risk because you can make a lot of gains on them. What I do want to do though, and what I probably will do more so in future, is highlight the risk management aspect of these coins a lot more. I actually have done a full risk management guide. I'm going to leave it in the link in the description below. as a bit of prerequisite viewing before you watch any future crypto content, because I genuinely believe it's one of the best videos I've ever put out, but I posted it when the market was a little bit quieter, so I'm sure a lot of you had not seen it at the time. Even if you have, I recommend rewatching it because it reinforces some lessons that even myself, I had to go back to because I got a little bit too bullish and I didn't take as many profits as I should. And I didn't manage to keep my gains, even though I had made paper gains at one point, as I'm sure a lot of you also did on this particular trade. The good news is there's plenty of other trades to come. We've already had plenty of other trades which have been hugely profitable. And I'm very, very confident in our system because the strike rate speaks for itself, at least in the Discord. Over time, if we can even maintain a worse strike rate, but still a positive one, we're going to end up making a lot of money this cycle. And at the end of the day, that's my goal. I'm going to have winners. I'm going to have losers. It is unfortunate. It sucks. I mean, I'm speaking as someone that lost probably the most money of anyone I know on the coin. I hadn't sold a cent even when it ran up and a lot of my community were taking profits. So trust me, I feel it. It's a good lesson. It's a good chance to reflect. And hopefully going forward, we can implement better risk management. And that's just as much a message to myself as it is to others. Now let's get on to the summary of my plan for the next few weeks after what's already been a slightly longer video than anticipated. But it's good because I wanted to address Lucky. I also wanted to talk about the current price action in the market, and I think it's valuable context for you guys heading into the new year, considering I probably won't be uploading tomorrow. So as I said a week ago, most of you would be better served checking out and coming back in the new year. I think this is still the case. Directionality during a choppy period like this is not very clear, and you do have, I guess, conflicting evidence on both sides. You have New Year seasonality looking really strong historically, but then you also have bearish Bitcoin price action, which could potentially temper the ability for altcoins to pump in the early part of January. And I do think that is going to be the case. However, there are a lot of people that are going to come back to the market with newfound optimism, looking for new opportunities in the new year, and that may in and of itself create some directionality. And that's why, even though Bitcoin looks distributive, I'm not really looking at flipping bearish per se. I'm looking at being protective over my capital, but my number one goal is, where are the opportunities? Now, that opportunity could be, as we discussed earlier, on a lower sweep, maybe of the 90K or the 88K region. And if that coincides with major high time frame retests on alts, on strong alts, that could be a great opportunity to get in. Conversely, looking if altcoins can establish a new uptrend, that could be a great opportunity to get in. So those are the two scenarios that I would look to implement in my game plan. Personally, I am nibbling on some stuff, not going aggressive because I'm still trying to protect capital into the new year, but nibbling on some stuff that looks good, and I'm happy to go in with more size once we have a bit more confirmation, because I still am a little bit wary of this price action on Bitcoin. I don't think it's a level to sell. I think the big de-risking on altcoins already happened, but I do think it's a level to be wary. You do have to keep in mind, as you can see in front of you though, Bitcoin has a new catalyst that it's never had in previous cycles, and that is, of course, the aggressive bidding that we are seeing from the spot Bitcoin ETFs, which is propping price up. So I do think that holds Bitcoin in good stead from a fundamental flow perspective, even during times of bearish price action. Also keep in mind that typically, as you saw in my video 2 weeks ago and this thread that I did, altcoins outperform from the period of January to May. And I don't think this will be any different this cycle based on the current trend that we are seeing for Bitcoin dominance. And in terms of altcoins that I would look to accumulate during this period under the parameters that I previously discussed, it's still very clear what the top trends are right now. DeFi, so infrastructure, utility, is still leading the pack. AI is still looking good. RWA is still looking good. And meme coins are still looking weak. I think at some point memes come back, but I have a bias towards favoring utility first because I think it runs sooner than the other coins in the market. So looking at AI, I think AI is a great sector to position in, looking at some of those agent plays that Paradise pointed out, looking at some of the infrastructure plays which are now down. I've got plenty of videos on my channel that go through my AI portfolio. My AI portfolio hasn't really changed, which is why I'm not going to rehash it today. The only changes I've made are adding 2 coins, LMT, so Limitus, and Morphware. Those are the only 2 coins I've added. I also have trimmed across some of the other positions, pretty much just haircutting all of them to make room for some new ones. I might have to make some decisions to cut 1 or 2 AI projects in the new year, but I have not done that yet. When I do, I'll keep you updated. But for now, those are the 2 that I've added. RWA, my plays are pretty much the same. I think CHEX and CPOOL remain the strongest plays because Mantra and Ondo have already run up significantly. Those are the 2 that I think will do well. Pendle, I think, is one that you can never fade either. I think utility, RWA specifically, does quite well in the new year. And then I think infrastructure does quite well. I think you've got a decent opportunity on Phantom after the pullback. I think you've got a decent opportunity on a few alts. Even Aptos with the founder leaving, I think there could be an opportunity given the fact that it ran up aggressively and has seen a major sell-off. That's one to keep your eye on over the next few weeks as a potential DCA. You've also got Hyperliquid, which has been resolute whilst the rest of the market has been pulling back. You've even got Solana. I haven't spoken about Solana that much recently. I guess it's not that high upside, but I mean, it's a decent play if you just want a safer layer one that could still give you gains, given the fact that it has recently sold off. So I think we are getting some more opportunities in the market now. You're just going to have to be a little bit patient. Hopefully you enjoyed this video. I will see you in 2 days' time in the next one. Have a lovely rest of your day and Happy New Year to all of you. Peace out.